Bauer, Scott Shellady, our two traders. Scott Bauer, you just heard Dennis Lockhart say we're getting awfully close. And he also talked about the Fed resuming credibility, or at least grabbing some of it back, because they're not so embarrassed that they stick to the wrong numbers here. But look at the 30-year fixed rate for a mortgage right now, and it has certainly skyrocketed. Forget, since December, where it was more like 3%. Right now, that's the yield. That's the 30-year Treasury yield. But if we could show the actual 30-year fixed rate, now you start to see the housing market slow down. What sectors are you watching most closely?
So, Liz, I think right now the way the market is trading, perception is reality, especially when you're referring to the Fed. So whatever they did yesterday, 50, 75, the perception was not going to be a good thing. So I don't think they're in a very good light right now. And that's how the market is trading. But in terms of how do you position yourself moving forward here, the banks during rising interest rate periods typically do well. But if we get to an economic slowdown, that obviously can hamper those banks. But there is one that stands out to me, and that is Citicorp. They have a 5.5 forward PE. I think it's really cheap. I love that bank among the rest of the banks that are out there. In addition, in this environment, you always have to look at cash-rich companies. So there's some in the tech sector that have been beaten up, and they're not fancy names. They're Apple, they're Microsoft, even a Cisco, if you will, that are cash-rich, that I believe can withstand in a really positive way here what's going on. And you want to own them down the road.
Oh, Apple's 4% cheaper today than it was yesterday. And we've got Microsoft more than 2% cheaper than it was yesterday, folks. Yeah, you've got Scott Bauer here nodding his head. Really quick on high energy prices. We do have crude and Brent higher in the aftermarket. Scott, what's your comment about that? Because that seems to be the driver of all things inflation.
It absolutely is, Liz. And the Fed is behind the curve because they're looking at data which is old. It's not leading data. And we know what's happening to Main Street USA. Main Street USA has started cutting back already, even though consumer spending is still up there. So to me, we are in a recession right now. And I'm going to go out and say by the end of this year, Liz, if the path continues this way, we may get the Fed to actually cut rates.
Oh, in 1 year, in the same year. Interesting. We've got to run, gentlemen. Scott and Scott are great Scots. We are watching a market that is all red here. Remember, the S&P already down 10 out of the last 11 weeks. We have lost a lot of ground.